The Australian economy heads into a critical week with inflation figures and earnings expected to set the direction for markets in coming months. Prime Minister Anthony Albanese reshuffles his frontbench, and how buying second-hand clothing could earn you carbon credits. Welcome to Fear and Greed, daily business news for people who make their own decisions. It is Monday, the 29th of July, 2024. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, the main story this morning, it is a massive week for the economy with official inflation data set to determine whether interest rates will rise again.
As most other developed economies lower rates or talk about lowering rates, the Reserve Bank of Australia is thinking about lifting them. If the consumer price index and underlying inflation figures come in above 4% annualised, there will be pressure on the local central bank to hike the official interest rate to keep prices in check. However, in recent days, there's also been growing debate about whether the Reserve Bank risks tipping Australia into a recession if it makes a knee-jerk reaction to inflation. The issue, economists warn, is households are continuing to struggle with rising cost of living pressures, and higher interest rates could well tip them over the edge. A new Deloitte Access Economics report, for example, argues that if it weren't for the federal government's Stage 3 tax cuts, the economy would be heading for recession already, regardless of the central bank's future moves. The Australian Bureau of Statistics will publish the June quarter inflation figures on Wednesday. The Reserve Bank Board meets on August 5 and 6. That's when we find out about interest rates. Deloitte said the economy is at a fork in the road. Down one road, higher than expected inflation could force the central bank to lift the cash rate from its current 12-year high of 4.35%. Down the other, Deloitte says, more benign inflation figures would allow the bank to keep rates steady and keep Australia on a narrow path of low unemployment and economic recovery. Certainly, Federal Treasurer Jim Chalmers is hoping there'll be no increase. Yesterday, he told Sky News that the Reserve Bank Board, when it takes its decision, weighs up a whole bunch of factors in our economy. Yeah, maybe, but really, inflation is the most important one, Jim.
Yeah. Let's not beat around the bush here, Jim. Sean, Wednesday's data will, it is so important, isn't it? No doubt it'll impact the share market as well, just as we head into earnings season.
Yeah, very big week. Rio Tinto, as is usual, kicks off earnings season on Wednesday morning. It's not usual a Wednesday morning, but it's always the first company to kick things off. The market's been pretty volatile over the past fortnight or so. It hit a record high just under 2 weeks ago. Then it fell sharply. Then it jumped again on Friday. While what's happening to interest rates is the backdrop, earnings season really will force investors to take a closer look at the fundamentals of different companies. Of particular interest will be interest rate sensitive stocks, some of the consumer discretionary companies, the retailers, particularly the smaller retailers. The property companies have done pretty well recently. Can they keep it up? Among the banks, only Commonwealth Bank actually gives a half-yearly report. The others give a quarterly report. It'll be really interesting to see if they can keep their run going. All in all, a fascinating 1 or 2 weeks ahead of us for both the economy and for markets.
Sean, speaking of earnings season, you've got a great interview coming up after the show. You're speaking with Brian Hand, Director of Equities Research Australia New Zealand at Morningstar.
Yeah, so we talked to Brian about earnings season, what's going to happen. But kind of more interesting, I think, Michael, is we talk about the stocks that he thinks are undervalued and the stocks he thinks are overvalued. And he names some of them, and this is purely on a technical basis, so on their price to earnings multiple compared to their historical averages. Well, there's probably more to it than that, but that's kind of the basis of what he's talking about. So it's really fascinating to see what he thinks is undervalued and overvalued.
Yeah, indeed. So, of course, we're not an investing podcast. You should go and get professional advice before making decisions. But it is fascinating hearing what someone like Brian has to say, especially when he does go through and names all of these companies. It is really quite exciting, isn't it, Sean?
Oh, it is exciting, Michael. Definitely.
Speaking of exciting, how did local markets finish up on Friday?
Well, exciting. It was like Ariana Titmus. I have to bring this in, Michael, because I know you love the swimming. And certainly her performance over the weekend was quite spectacular.
Oh.
She's kind of the golden girl, using the cliche of Australian swimming. However, one thing that you probably haven't focused quite enough on is what's happening in the handball. My own personal favourite.
I had no idea where you were going with this. I thought, okay, somehow we're going to get back from the swimming all the way back to equities. I was not expecting us to detour via the handball.
So the great thing about the handball is it's a European sport. So you always have the Europeans doing really well. But over the weekend, like Egypt beat Hungary. I know, probably not something that many listeners knew, but in handball, Egypt beat Hungary. Now, Hungary's a handball nation. I didn't realise personally that Egypt was. That's kind of cool. Like Germany beat Sweden. They're both kind of powerhouses in the old handball world. I can only suggest, I'm talking about the men's here, I can only suggest that you get into it. I mean, in the women's, Brazil beat Hungary. Like, that's a bit of a surprise in the handball world.
I'll have to take your word for it, Sean. I'm disappointed to know that Australia has never qualified a men's or women's team.
So
for the handball.
Now I'm just going to talk about things in the Sydney Olympics back in 2000. I was fortunate enough to get tickets to a handball game in which Australia played. Because, of course, when you're the host nation, you get to go in all sports.
Yeah.
And, well, the final result wasn't close. I think that's probably the best way to put it. I can't quite remember what it was. But it was just like a bunch of blokes from, I can't remember if it was Melbourne. Maybe they were Melbourne or maybe they were Sydney. They kind of played in a club team and they just got together, made the Olympics. And they enjoyed themselves, I suppose. That's how we should
Can you imagine that Melbourne club team, like picking up the phone to like the AOC one day, and the club treasurer puts his hand and goes, "Fellas, you're not going to believe what we're doing next week. We're going to the Olympics, guys."
That's actually when I can hardly even remember the game, but that's kind of when that's the first time I ever saw handball, definitely. Because then I watched the Lithuania game, and wow, they were good. And that's kind of why I've been following handball ever since.
Now, can you please bring us back on track? Can you segue successfully from
Possibly.
handball back to the S&P ASX 200 and how it did on Friday?
Yes, because the whole point, it did well on Friday, which is like Ariana Titmus did over the weekend. That's where we started this conversation. The S&P ASX 200 closed up nearly 0.8% to 7,912 points. Mind you, for the week, it was down about 0.5%. Friday was a particularly bad day for the gold stocks, so including Bellevue Gold, which ended up 20% lower than where it started. That's after it asked investors for another $175 million and lowered its production forecast. The price of gold had also fallen late last week. That hit the whole sector. Gold Diggers, Red 5, Northern Star, Regis Resources and Perseus Mine were among the worst performers. In fact, if you throw in Bellevue Gold, they were actually the 5 worst performers on Friday. Away from gold, though, some of the miners did really well. Rio rose more than 3%. BHP jumped more than 2%. That followed a rebound in iron ore prices. Macquarie Group was another strong performer last Friday. The laggards included Woolies, Telstra and ANZ.
And of course, with that slightly lower gold price, it just ever so slightly reduces the value of those gold medals won over the weekend.
Very good
as well. If we wanted another segue, which I don't think anybody really asked for that.
I might try and do something over the next couple of weeks. Not something we've done silver, but let's do bronze prices. No one ever talks about bronze prices.
Yes, let's do it just for the Olympics, Sean.
Yeah.
Now, thanks to Blue Chip Communication, the experts helping financial services companies market, communicate and grow. Visit bluechipcommunication.com.au. Let's check international markets. Much going on over the weekend, Sean?
Well, oil remains under pressure. Brent's fetching around $81 a barrel. Gold, we mentioned, it's actually trading around $23.90 an ounce. Iron ore futures bounced late last week. That's why Rio and BHP did so well. And the Aussie dollar's buying about 65.4 US cents. Michael, though, bigger than all of that put together. A commodity we've spoken a bit about this year, but not in recent weeks or months. Coffee. Prices going through the roof.
Oh, dear.
And we're talking about Arabica beans and the more budget-friendly Robusta variety, the Nescafe Gold, I would imagine. Don't know.
The International Roast.
That's it, International Roast. That's actually what I was thinking, yeah. There are major supply disruptions thanks to drought, dry weather, and the two largest producers, Vietnam and Brazil. That's pushing prices higher. The boss of Lavazza came out in the last couple of weeks and said it's going to get worse. In fact, prices have nearly doubled since October last year. So if you're paying under $5 for your flat white, you're doing pretty well because I don't think it's going to stay there.
Yeah, the cost of living crisis is now officially touching every part of our lives, isn't it?
That's right. Breakfast, lunch and dinner.
Indeed. All right, plenty to get through, Sean. We'll be back in a moment with the rest of the day's business news. Sean, Prime Minister Anthony Albanese has reshuffled his front bench, with Tony Burke being the big winner taking on the Home Affairs portfolio, while Claire O'Neill, who had that job, will look after housing and homelessness.
Mr Burke, who was Employment and Workplace Relations Minister, will also take on Immigration and Multicultural Affairs. Those roles had been held by Andrew Giles. Mr Giles now gets Skills and Training Minister, though that portfolio isn't in the Cabinet. So really Andrew Giles is the biggest loser out of this. Mr Burke remains leader in the House. Now Senator Murray Watt will become the next Employment and Workplace Relations Minister. Housing and Homelessness Minister Julie Collins will become the Minister for Fisheries and Forestry and Minister for Small Business. Senator Malandiri McCarthy will replace outgoing Indigenous Australians Minister Linda Burney, as was widely expected, and Pat Conroy will move into the Cabinet as Defence Industry and Capability Delivery Minister. He's also got the Pacific and International Development in that. You put all that together, a lot of names. Basically, Tony Burke's the winner, so too Pat Conroy. Claire O'Neill is a bit of a loser. Claire O'Neill, but, less of a winner, should we put it that way? And Andrew Giles is definitely less of a winner.
Now, Sean, how about this one? Rupert Murdoch is locked in a secret legal battle against 3 of his children over the future of the family's media empire as he moves to preserve it as a conservative political force after his death. This is according to a sealed court document obtained by the New York Times.
Pretty incredible, this story. The 93-year-old Mr Murdoch, late last year, made a surprise move to change the terms of the Murdoch's irrevocable family trust to ensure that his eldest son and chosen successor, Lachlan, would remain in charge of his collection of television networks and newspapers. The trust currently hands control of the family business to his 4 children. That's when Mr Murdoch dies. But he's arguing in court that only by empowering Lachlan to run the company without interference from his more politically moderate siblings can he preserve its conservative editorial bent and thus protect its commercial value for all his heirs. Last month, the Nevada Probate Commission found that Mr Murdoch could amend the trust if he's able to show he's acting in good faith and for the sole benefit of his heirs, according to a copy of the 48-page decision. A trial to determine whether Mr Murdoch is in fact acting in good faith is expected to start in December. Now, those 3 siblings, it's James, Elizabeth and Prudence, were caught completely off guard by their father's efforts to rewrite what was supposed to be an inviolable trust and have united to stop him. That's all according to this incredible New York Times report.
It's a remarkable story, and particularly the fact that it remained that all of this was going on and no one knew about it.
Yeah, I mean, it's Rupert and Lachlan versus James, Elizabeth and Prudence. Now, it's Rupert versus James, Elizabeth and Prudence. I'm not sure where Lachlan sits on all this, but just phenomenal story.
Yeah, incredible. Now, Sean, this next one feels like it's just targeting me specifically.
Mm-hmm.
Any Aldi shoppers, myself included, hoping for an online version anytime soon are going to be a wee bit disappointed. The German-based supermarket chain has abandoned plans to go digital, even as Woolworths and Coles are pushing even further into that space.
Aldi opened its first store in Australia in 2000. It's grown its share to 10.5% of the supermarket sector. It's been looking at moving into online sales. But Jordan Lack, Aldi's Managing Director of Buying, told the Fin Review that after serious consideration, the retailer dismantled its online team late last year. He said in the current environment, amid a cost of living crisis, customers want value over convenience. With price playing a bigger role, the cost of an online store would force prices higher, which actually works against Aldi's strategy. It's fascinating, this. The group's now considering new products, most recently launching Aldi Insurance. It's targeting growth corridors in the outskirts of major cities, growing sales at its existing 570 stores. The whole point in this, though, it wants to have lower prices. If it does an online store, things get more expensive. And the idea is that people now in a cost of living crisis value over convenience.
It does make sense. I begrudgingly accept that.
Yes.
Sean, corporate Australia is getting better at reporting their climate considerations into their financial statements, which is a big step towards being able to credibly reduce emissions.
Research from the Australian Council of Superannuation Investors say more than 80% of companies are now in a position to meet new mandatory climate disclosures, with adoption having doubled in the past 5 years. The majority of ASX 200 companies, 131 companies, now have net zero commitments, and many have also set interim targets, the report says. Almost 30% disclose how climate change is considered when evaluating financial performance, while 2/3 provide information of their exposure to the physical risks arising from climate change. Despite this improvement in transparency, gaps remain in the depth and breadth of climate reporting, with some companies only partially reporting, and 18% of the index provide little reporting on their climate risks at all. So, much improved performance by the top 200, still some way to go.
I mentioned this next one at the top of the show. Customers who buy second-hand clothes at op shops would earn carbon credits under one of the first privately generated trading schemes to be considered for adoption by federal regulators.
The idea comes from Good Sammy Enterprises. The boss of that, a guy called Kane Blackman, who reckons governments should offer financial incentives to people who recycle and reuse clothes in a bid to curb greenhouse gas emissions generated by the import of new garments and textiles. Now, a report in the Fin Review talks about the proposal being one of 43 ideas now being assessed under the Albanese government's plan for private citizens, corporations and charities to play a bigger role in determining eligibility for Australian carbon credit unions. The Clean Energy Regulator has devised 31 different methods for earning these units, these carbon credit units, but the government this year decided to use crowdsourcing to come up with some new ideas. Anyway, this is one of them. The idea that people who recycle and reuse clothes actually get a carbon credit. Kind of cool.
Yeah, kind of makes sense. Turning to international news now, Donald Trump says he would end the persecution of the crypto industry and sack the chair of the Securities and Exchange Commission if he wins the election in November.
In a direct pitch to cryptocurrency devotees at the Bitcoin 2024 conference in Nashville, could you imagine that? The Nashville Bitcoin 2024 conference?
It's not really the kind of... You kind of expected more in Vegas, wouldn't you? Or something like that?
Yeah. Anyway, it was in Nashville. Mr. Trump promised to end what he called the Biden administration's crusade against Bitcoin, according to a story in the FT. Crypto's embrace of Trump comes against the backdrop of a difficult few years for the industry, which has faced an aggressive clampdown from the SEC. The SEC, of course, is the industry regulator. The SEC has pursued numerous crypto companies and executives, helping put FTX founder Sam Bankman-Fried and Binance founder Changpeng Zhao behind bars. It's also launched lawsuits against exchanges Coinbase, Kraken and Gemini. Mr. Trump promised to end the repression, saying rules should be written by people who love your industry, not by people who hate your industry. Mr. Trump also said he'd instruct the Department of Treasury to abandon the creation of a central bank digital currency and appoint a Bitcoin and Crypto Advisory Council.
This is fascinating. The wealth of French tycoon Bernard Arnault has fallen more than any other billionaire this year because the share price of the LVMH conglomerate is tumbling.
Yeah, so LVMH, the fashion to champagne luxury goods group, is struggling as people pull back on spending, particularly in China. Its share price is off 25% since March, and Mr. Arnault's wealth is closely tied to his massive amount of shares in LVMH. According to Bloomberg's Billionaires Index, his fortune has dropped by $20 billion this year. He's really struggling. He's only at $187 billion. That's US dollars, I'd like to add. So 187 billion US. What's that, 260 Aussie? It's the worst performance on the list of the 500 wealthiest people, and Mr. Arnault has now slipped to the world's third richest person. Last Wednesday, Elon Musk, now the world's richest person, suffered the biggest single-day drop, down $22 billion. That's after Tesla's share price tumbled 12%, but he's actually still up about $11.5 billion for the year. So, Bernard Arnault, I hope things are okay at home.
You wouldn't check your bank account, would you? If you were someone like that, you're just like, it comes and it goes, doesn't it?
Yep. Come see, come sa.
Yeah. Unless you're like Scrooge McDuck and diving into your money pit, in which case you need to know the depth of the money pit before you dive in.
Very true.
Sean, 2 must-listen pieces of content coming up next. First up is Fear and Greed the week ahead, featuring our resident economist, Stephen Koukoulas. And as you mentioned, a massive, massive week.
Yeah, look, after a couple of quiet weeks, Stephen is fired up for those CPI figures. There's also other stuff out like retail trade, building approvals, house prices. So it's a huge week for the economy all in all. Stephen, as you'd expect, very excited about the whole thing.
Indeed he is. So that one's coming up next. And after that, the Fear and Greed Daily interview with Brian Hand from Morningstar.
Yeah, I reckon the highlight of that interview is all about what Brian thinks is undervalued and overvalued as we head into the reporting season.
Yeah, indeed. So they are coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au, which is also where you can sign up for our free weekly newsletter, which comes out midweek. Do it now, then you don't have to worry about it ever again. Thank you very much, Sean.
Thank you, Michael.
It's Monday, the 29th of July, 2024. Make sure you're following the podcast. And please join us online on LinkedIn, Instagram, X, TikTok and Facebook. I'm Michael Thompson, and that was Fear and Greed. Have a great day.